The goal with the third part of this problem is to once again close out these variance accounts. It's the end of the accounting period, so we make them go away. We credit these accounts and we debit this one. And instead of doing what we did in the prior portion of the problem, which was this, pushing it all to cost of goods sold, the difference between those accounts, we take and distribute that difference, that $5,500 gets distributed between work in process, cost of goods sold, and finished goods. Now you got to be careful here. It's somewhat confusing when you look at, we've got two figures for cost of goods sold, an unadjusted cost of goods sold amount and a cost of goods sold only the prime cost. Remember, prime costs are the material and the labor, and the unadjusted balance would include the material, the labor, and the overhead. So the proration method, which is what we're doing here to dispose of this $5,500 net variance, says you split that $5,500 up amongst those three accounts: work in progress, finished goods, and cost of goods sold. Now, how do you break those up? You take the balance of each of the three accounts, you sum them up, and you figure out what is a percentage of each account relative to the total of all three. Now, you notice what I took here was the prime cost and not the cost with the overhead in it, because we're only dealing with prime costs, material and labor variances. So when we're doing the proration method, we're only taking and allocating that $5,500 according to the total prime costs of each element within that grouping. So I added up all three of those different numbers and then took each one as a percentage of the total, and these are rounded obviously. I could go ahead and format this a little different so we get more detail. And you would then take and say, okay, if I take of this $5,500, I give 15.5% to WIP, 10.5% or 10.7% to finished goods, and 73.8% to cost of goods sold. So the total here is once again $5,500, but now this journal entry changes to not have so much go to cost of goods sold. Instead, the cost of goods sold gets this $4,059 amount. You can see my journal entry doesn't balance. I need more credits. I need to go then to work in process, work in progress, same thing. Okay, WIP is $852.50, and then lastly we go to finished goods, and the finished goods amount is the $588.50. And so if I adjust my formula here to pick up all these accounts, you'll notice my journal entry balances. Debits equal the credits, and what I've effectively done is closed out all those variance accounts and appropriately applied the net variance amount to each of the three categories that might still have some of those costs lingering in those accounts. So that's part of this. I guess that really is the third requirement. And we'll just go ahead and round out the fourth requirement as well, which says tell me what the adjusted balances are in each of these three accounts: work in process, finished goods, and cost of goods sold, after we close the variance accounts out using the proration method. So if you look at your T accounts here, I think this is the easiest way to visualize it. These accounts are now closed: the 45,600, the 5,800, the 4350, and the 61,250. And I got those numbers by posting this journal entry, and then you'd have these three entries that need to be posted as well. But before we can post these three amounts, we need the starting balance and cost of goods sold, and that's where these numbers up here come in. This 982,140 is my beginning balance for cost of goods sold. My work in process has a 205,700 beginning balance, and finished goods has a $143,000 beginning balance. Okay, so now we can post the variance amounts that were posted to each individual account. We credited finished goods by $589. We credited work in progress by $853, and we credit the cost of goods sold for $4,059. So the ending balance is simply whatever the amount is left over in each account. So there it is for cost of goods sold. For work in progress, it's this amount minus here, oops, minus this one, 204,847, that's the ending balance, the adjusted balance. And for finished goods, it's the 142,411. So that's what I was looking for in the fourth requirement, was these ending balances.